Welcome to Financial Insights in Minutes. Today, we're delving into the tumultuous landscape of the 2024 housing market and the shocking revelations ahead.
We'll break down critical insights from Cathie Wood on investment strategies while navigating rent cuts and dwindling tenant demand.
You'll learn how Amazon's layoffs are trickling down to affect overall market stability from experts like Jason Walter.
We'll also hear from Gerli about the looming fears of a housing collapse and what that means for the rental market.
With mortgage rates fluctuating, understanding the field is crucial for buyers, and that's why we're here to guide you. So, let's jump right in as we summarize the day's top insights delivered directly to you in minutes. Let's dive right in. Florida's rental market is making waves as corporate landlords find themselves in a bind. Rent cuts of up to 30% are not a drill.
Absolutely. Gerli sheds light on the dire situation where many landlords are strategically selling off properties. Buckle up, we're in for a turbulent ride through the housing crisis.
So what's the big picture here? Why are these corporate landlords cutting rents?
The core thesis revolves around these corporate landlords struggling to find tenants at high rental prices, driving them to sell properties and exacerbating the housing downturn.
Let's break down the key points. First up, those jaw-dropping rent cuts.
Yes, we're seeing rent reductions of up to 20%, yet properties remain vacant. It's like throwing a party and no one shows up.
What about these investors? What's their game plan?
Investors like Blackstone are selling off properties now, trying to get ahead of a deeper market correction. They want to be the first ones out.
And how does this all affect home prices?
Investor sell-offs are dragging down local values. This has happened before, and history could repeat itself with a significant market correction on the horizon.
Now let's dive into predictions. What does the future hold for the rental market?
Expect to see continued instability. Even with rent cuts, many tenants will struggle to pay. This could lead to increased evictions and more downward pressure on rental prices.
And for future investors, what's the silver lining?
If you play your cards right, there's an opportunity to seize properties at discount prices. Target markets where the rent-to-income ratios are manageable.
To wrap it up, what are the key takeaways from Gerli's insights?
Gerli emphasizes that the current disruption presents challenges, but also opportunities for strategic investors to navigate these turbulent waters.
And what advice does he give to potential buyers?
Investors must closely monitor local market dynamics to steer clear of pitfalls and position themselves for successful acquisitions in the coming years.
Time to navigate the currents of today's discussion. Our next insightful summary dives deep into Amazon's shocking layoffs and the hidden truths of the bond market.
Let's get straight to the facts. When a mega corporation like Amazon announces massive layoffs, what ripples does that create in the economy?
So, what's the core message in this discussion?
The core thesis is alarming. Amid the layoffs, we've actually lost over 2 million jobs last year, indicating a fragile labor market. Amazon's decisions aren't isolated, they signal deeper economic concerns.
Let's unravel those key points about Amazon's situation.
The scale is massive. Amazon's cutting over 10,000 jobs, yet they're raking in $600 billion. Sounds like a big disconnect.
And what about the larger labor market?
A staggering 2 million jobs lost means we're in murky waters. Amazon's layoffs hint at broader economic struggles on the horizon.
How do these layoffs impact the bond markets?
When people lose jobs, they might rush to withdraw from their 401ks or pension plans. This rush can lead to a bank run. History shows us that fear is a powerful motivator.
What can we expect moving forward?
The forecast isn't rosy. More industries might cut jobs like Amazon, leading to economic distress. Definitely something to keep an eye on.
Let's peek into that crystal ball. What's on the horizon?
Expect to see continued layoffs as companies grapple with market pressures. It's a red flag for sectors already feeling the strain.
And what about bank stability?
With layoffs affecting financial confidence, we might witness panic-induced bank runs, shaking up the very foundations of our financial system.
So, what's the wrap-up here?
Overall, Amazon's layoffs don't just hurt employees, they signal deeper cracks in our economy. Will more jobs vanish? Are we headed for bigger storms? Stay tuned.
What should viewers take away?
It's vital to understand these implications. Other companies may follow Amazon's lead, affecting jobs and the economy further. Keep watching closely to stay informed.
All right, folks, let's dive right in. The economy's feeling shaky, but what does that really mean for us?
Absolutely. We have Ken McElroy breaking down the complex web of economic indicators, pointing to potentially stormy waters ahead. Let's get straight to the facts.
So, what's strapping us down? What's the crux of Ken's argument?
The core thesis highlights a storm brewing. Rising unemployment, decreased spending, and ballooning debt are intertwining to create an economic collapse. The signs have been there, folks.
What about the unemployment situation? What's crucial here?
The rise to 4.4% sounds small, but translates to millions impacted. This trend could unearth deeper issues affecting consumer spending.
And how are wages stacking up against inflation?
It's hit or miss. While wages are increasing, they aren't keeping pace with soaring inflation rates. This squeeze is leading to stricter budgets.
Debt is a crucial factor too, right?
Definitely. With many people relying on credit cards just to survive, we may soon see a tipping point. It is a dangerous cycle.
So let's gaze into Ken's crystal ball. What's he predicting?
Ken predicts an impending economic collapse if consumer spending continues to decline alongside rising unemployment.
And what about policy responses?
Ken warns us that we might see knee-jerk reactions from the government, pumping resources into the economy to stave off a downturn.
To sum it all up, what's the overarching message Ken wants us to take away?
We need a call to action for policy and personal strategies to address this growing economic uncertainty. Keeping an eye on these indicators is more critical now than ever.
Any actionable advice from Ken here?
Yes, be proactive. Now's the time to reassess personal finances and prepare for potential shifts. We'll have to navigate these treacherous waters together.
If you find value in these insights, consider subscribing to keep up with our future discussions.
Liking and subscribing helps us continue delivering essential financial content for you.
And as we wrap up, we'd love to hear your thoughts. What do you predict for the economic landscape ahead?
Drop your predictions in the comments. Your insights are what makes this conversation thrive.
Let's dive right in. Our next insightful summary covers costly home buying mistakes to avoid. Todd Sachs is steering us through the turbulence of buying a home, so buckle up.
Absolutely. With home prices on the rise, understanding potential pitfalls is crucial. And considering the last few years brought a lot of challenges, choosing wisely could save buyers from future headaches.
What's the main takeaway from Todd Sachs' insights?
The key thesis paints a concerning picture. The majority of homebuyers, specifically 82%, have regrets stemming from mistakes made during their home purchase. In a dog-eat-dog market, savvy decision-making is more important than ever.
Let's break down those key points Todd discussed. What are some of the homebuyer mistakes?
Buyers often feel a pinch from pressure in competitive markets. Notably, 82% reported regret post-purchase, highlighting the dire need for thorough research and realistic budgeting.
And what about buyer expectations?
Many buyers entered the market with dreams but faced reality. A staggering 51% of buyers exceeded their original budgets, leading to significant post-purchase regrets and financial strain.
What essential strategies did Todd highlight?
First and foremost, the necessity of a professional home inspection can't be overstated. Additionally, crafting a clear list of needs helps buyers stay focused, while deep research on neighborhoods safeguards against impulsive decisions.
What should buyers be on the lookout for in the market?
Predictions indicate fluctuating home prices alongside tighter lending standards will redefine the landscape. Furthermore, thorough home inspections will be a staple as buyers seek to mitigate risk.
And what about the future of buyer education?
There's a noteworthy trend. Buyers are increasingly seeking resources to better educate themselves. Expect workshops and webinars to provide crucial insights, with agents' expertise being prized more than ever.
What are the big takeaways from Todd's session?
The overarching lesson is clear: knowledge is power. By avoiding common pitfalls, understanding market dynamics, and prioritizing thorough research, buyers can make informed and successful purchases.
And how do personal values play a role?
Reflecting on priorities shapes a truly fulfilling home buying journey. Whether it's financial preparedness or emotional readiness, aligning personal values with buying decisions is the key to satisfaction.
Time to navigate these currents. Today's focus is on the perplexing state of our housing market. Why are home sales plummeting even as mortgage rates drop?
Indeed, let's get straight to the facts. Despite lower mortgage rates, home sales have surprisingly remained sluggish, a conundrum. What's the reason behind this?
So what's the core thesis here?
The crux of the discussion is that while mortgage rates are at their lowest in over a year, buyer applications aren't rising correspondingly, leading to a paradox in the market.
Let's dive into the first key point, mortgage rates.
Right? The average mortgage is currently a modest 6.12%, down significantly from last year's 7.29%. But why isn't this prompting more purchases?
What about pending home sales?
That's stark. Pending sales are down 8% compared to last year, indicating that buyers are hesitant, which is a significant red flag for the overall market.
Moving on to home prices, what's the scoop?
The median home price currently stands at around $388,000, reflecting a 3.7% increase from the previous year. It's a double whammy.
Interesting trends in inventory. What are we seeing?
Inventory is down nearly 30% from pre-pandemic levels, with regions like California experiencing even more drastic drops, leading to continued price pressures.
What about predictions? What can we expect moving forward?
Looking ahead, if the Fed cuts rates as anticipated, we might see an uptick in buyer interest. However, if home sales don't rebound, prices may not only stabilize but could also dip.
And how might economic factors influence buyers?
Absolutely. Consumer sentiment will play a pivotal role in housing demand. If the economy shows cracks, buyers are likely to wait and see before making any commitments.
So, to wrap things up, what's the big takeaway?
The key point is that even with falling mortgage rates, buyer interest is weak, which underscores the intricacies of the current housing market landscape. It's a head-scratcher.
What do you think about the current market? We'd love to hear your thoughts.
Drop your opinions in the comments. It's your turn to join the conversation on this perplexing real estate puzzle.
What a robust discussion we've had today about the shifting landscape of the housing market. Cathie Wood suggests we must adapt our investing strategies given the dropping rent prices.
Absolutely. And let's not forget Jason Walter's insights on Amazon's layoffs. He emphasizes how those layoffs might signal a larger economic slowdown that could hit the housing sector hard.
I found Jerome Powell's perspective particularly enlightening too. Fluctuating mortgage rates will clearly impact many potential buyers' affordability in today's market.
And Nick Gerli really paints a stark picture about the risk of a housing market collapse. It's something we all should keep an eye on.
Todd Sachs brings a practical view on how homebuyers can navigate these turbulent times. His advice is vital to avoid pitfalls.
With so much information at hand, viewers, it's crucial to stay informed and prepared.
Don't forget to like this video and subscribe to our channel for more critical insights that can help you succeed in today's economy.
Thank you for watching. Make sure to check out our other videos for more fabulous financial insights. Stay savvy.